Good morning. Today is Saturday. It is the 18th, September 18th. The title of today's session is Tread Lightly When the Short-Term Trend is Fighting Against You. Obviously, since basically the entire year has been a very strong uptrend, we're currently testing key levels. A commentary from some clients of mine basically said, let's try to keep these videos around 5 to 10 minutes, and I will try to do that while also showing you what I need to show you. So we will try to do that. Appreciate the feedback, and we will get directly in the charts now. So as you can see, this week was just difficult, period. Seasonality wise, it's difficult. You can see here that after the 17th, which was yesterday, historically, it's been kind of since 1950 been a weak seasonality period. We all know this. These really have not meant a lot this year. Seasonality, we all know mid-month has been weak. Test 50-day moving average, test 50-day moving average, test 50-day moving average. We're currently there right now. What concerns me a little bit is that we're not getting the relief bounce hard. And that's holding. So this week we got the touch at the 50-day, relief bounce, and struggling to break 44.80. So we have had a positive last 2 weeks by getting in at key levels and seeing if that holds. We get a little bit of a bounce because buyers are still buying the dip. I'm interested to see if that happens. The biggest factor, in my opinion, this week was quad witching. Quad witching is basically a huge rebalance that, equally weighted ETFs have to rebalance. And so imagine you're in an index with huge stocks that have done this year. A lot of these names had to rebalance in an equally weighted ETF. Not all ETFs are equally weighted, but you saw this week a lot of nothing really died this week. I mean, this is not anything dramatic whatsoever. I believe in the last 2 weeks, the S&P 500 is down like 2.67% from the peak. So the fact that we're positive, we will take that. But you can see seasonality wise is not good. Usually it's not great until the end of September, get a little bit of bounce, and then we actually get another leg lower. So my biggest concern is this is this is a change in character right now. Would not be surprising to see a relief bounce at somewhere. So I did add some of the close. To be direct with you, we sold off even more because quad witching has been trying to take effect throughout the week because it has such a big impact because there's so much money in the market right now. And so at the close, which was actually quad witching that happens at the close, I believe, and I could be wrong, so if somebody knows, please let me know, but I believe it had an even bigger impact because a lot of these names that were trying to sell off during the week by a rebalance that institutions were doing kept getting bought by retail. Well, they still have to rebalance by Friday at the close. So I think this is definitely an impact of quad witching, seasonality, and options expiration. Just seasonality, just a lot of things at the same time that have been difficult to deal with. So overall, nothing dramatic has happened, but to be positive the last 2 weeks in a negative tape has been good for us. We definitely needed that. So nothing to brag about, but it's good asset protection at this point. And that's something that we have done well at Gurney Financial. Where we need to improve is buying at key levels and seeing if they hold. And so that's what I've been doing. We bought at the close, even though it will not be perfectly timed by any means. I would love to see this. Here's the game plan. Here's the game plan on Friday. You can see anything below 44.55 said watch out, it gets ugly. And we probably retest 50-day moving average, which was the 44.34. Game plan next week. I would love to see a 4,400 and 43.80. And you're like, Jonathan, you want it to go down and you just added? Well, it's a risk reward game to say every time we've kind of tested these key levels right here, I mean, this is a trend. I have to buy some of it in case it bounces again. I hope it doesn't. I hope it does test the 4380 or 4400 range. The market is so strong right now, I'm not sure we get much more than that. I hope we do, but we may not. So just something to be aware of. I mean, this is just to kind of show you what is the majority of the gains that are holding up the S&P 500. There's a lot of names doing well, don't get me wrong, but these names are a huge portion of the indexes. So when they get a rebalance, it's going to impact the market. Nothing really died this week. There are opportunities, but I'm not going to add to individual names till I actually see strength hold. We've had one-day bounces, relief bounces, and nothing has held great. So opportunities ahead, I feel good about that. Put call ratio, the biggest concern with this, again, is we're not getting the quick bounce that we have recently had in a really strong market. Things are kind of, people are complacent. We're not getting that pounce anymore. I hope we do see lower, but I added in case we don't, okay? So we are still seeing complacency. For reference, in August when we saw this dip, the put call ratio hit 60, and we're not quite there yet. Doesn't mean it has to happen, but there's really not a lot of concern out there, which is not what I want to see. I want to see fear to think a bottom could be in. So ideally we open up red. If we see green, it might induce selling. So we keep going into that same cycle of opening green, people sell into it, we go a little bit lower. It's been that cycle the entire week. So again, seasonality is ugly. We all know breadth has been not good at all. If I show you, where is that chart? There it is, Cleveland Index. We all know this. I've been showing this since February to say, hey, it's been ugly for a while, breadth-wise, just to kind of give you perspective. Like, the average stock in the overall market is down significantly. So we have a tale of two tales here. The big names doing well, and it's not just the big names. You can make a lot of money in other names, but in general, what's moving the indexes are the big names, the big strong names. So at this point, it's kind of the safe haven because they have good financials. But we'll see if that lasts. I'm not sure if that will last long. I think the majority feel like the market is invincible at this point, and it's strong. The Fed has pumped a ton of money into the system. This could last for a little bit longer. So on the calendar, we have Fed Tuesday and Wednesday. We have CPI, or inflation data, on Tuesday. Definitely things I'm watching. The strategy of buy key levels and see if it holds has been working. I've done nothing but trade the indexes, been positive when the indexes are negative. So it's been a lot of scalping in and out quick. So I'm not getting killed. We're in a mini downtrend. You can see last September, same thing happened. Down movement, sideways. Do we get a little bit lower? Potentially. We'll see. But seasonality, as you can see, just like it did last year, toward the end of September, then we started going. So we might need another week of ugly. We'll see. Nobody knows, but you can see that I'm playing a game here and saying I want to add about 50-60% at a key level. And the key level for me was right at the 50-day moving average. I bought at 44.34. It did go a little bit lower after the close because of quad witching, the rebalance had to occur, but I'm interested to see what the appetite is like when investors see on Sunday at 6 p.m. is when they see the index is down 30 basis points, will that quickly be swept up? We shall see. So risk reward, I hope it goes lower. I have plenty to add. Better risk reward on a lot of names that have especially large cap names, the Googles, the Apples, finally got a little bit of a hit. Not anything serious, but I mean, a Google right now is below the 21-day moving average, which you can see has held that trend for a while. So if this doesn't turn quickly, it could get a little bit ugly, and I will be fine because I'll be trading key levels, but I'm a little bit cautious to get into individual names until we see confirmation. And we've had 1 day confirmation, not a 2 day confirmation for 2 weeks. So we shall see. Overall, market's not dying. The market's down like 2.67% off the peak, the S&P 500. Nothing dying at this point. We're hanging in there. We've done what we have done well in the past, is prevent dips. But something that I am doing that I need to improve on, and we are improving, is to participate during the downfalls at key levels. That way, if I miss a rebound, basically participate in the rebound just in case. And that's exactly why I do think we go lower, but I'm going to place a little bit on because the market over time goes up. I mean, I have to play those odds. So hope that helps. Have a great weekend. I feel like we're in a really good spot. Just be aware that seasonality is ugly, and next few weeks could be very, very interesting. So we will continue to do our best and keep you posted along the way. Thanks, guys.